let me interject something right there. I was talking with a banker last week, and I said, what's the difference in remaining with a client, giving a client a break, extending terms to a client as opposed to not? And this banker said to me exactly what Nikki has said, is I want to know that that person understands what's happening in their business globally, regionally, and locally. I want to know that they're a student of their business. And so if I know that they are understanding what's happening in the marketplace as it relates to their business, and that they're doing something about it, that they're consulting with other business owners like themselves in their field, they're getting counseling from small business consultants or someone like the TSBDC or the Urban League, that they're working hard at understanding how to move forward. That could be the difference in whether or not we extend additional terms or whether or not. So I think that's a great point, is understanding your business, not just from, well, here's what's happening with me, but what's happening in your business segment, in the region, and globally. So, Tracy?
Yeah, well, it's true, the credit markets are shrinking, but there still is capital to be had for small business. We are not a bank, but we do provide growth to small businesses, and we are lending money right now. One of the important things that Dwight talked about is, do you have skin in the game? We look at that. And we work very closely with the business owner, and we build that relationship so that we're not surprised down the road that there's trouble. If there's a sign of trouble, we try to work through it with them and work that with them to get to the other side so that they're successful. We're not going to just walk away, and we don't want them to walk away either.
Talk about absolute minimum requirements.
Absolute minimum requirements. Well, for us, that would be you must submit a business plan along with the application. It's not a long application. It's very short and straightforward. There's a checklist that you go through. If you're an existing business, you must provide 3 years of business tax returns for the principal. We do require a historical cash flow on a monthly basis, and then a cash flow on a projected basis for 12 months. A lot of people submit the standard statement of cash flows that you would see a CPA include in the financial statements, but that doesn't really tell us the ins and outs of cash during the year and what months your needs are, when you have excess cash and when you have shortage of cash. So that's why it's really important, because that helps us match our product to what you're trying to do in the marketplace. Some of the funds that we have kind of overlap with Dwight and others. We have the USDA, we have the SBA microloan program, and then we have other funds throughout the state that we can pull funds, and we really match that based on the needs of the client. So it's really seamless and it's not transparent.
3 or 5 years of P&L experience in that business.
We want to see a minimum of 3, but we prefer 5. Especially if you're a startup, we're going to ask for 5 right off the bat of P&L experience.
So help me understand. Let's say, I'm not trying to put you on the spot, I'm just trying to understand and help these folks understand. If I have been a general manager of a Pizza Hut for 5 years, would you consider that P&L experience?
I would consider that. Although, let me just say that restaurants is not the space that we lend in right now.
I understand.
But yes, we would consider that. And let me also say that, there are always going to be policy exceptions and mitigants that we use to get around certain things. But basically, when it comes down to it, when we underwrite a deal, we're underwriting the business and the principals, and we use the 5 C's of credit. We're not a credit score lender. We don't weight heavily on one or the other. We look at all 5, and really it comes down to, do they have the ability to repay the debt and grow the business?
Dwight, you got anything to add?
Yeah, I'll just piggyback on the 5 C's of credit. That's really a good place to start. Capacity. Do I have the management ability to run this thing? Cash flow. Personal credit. In a small business scenario, personal credit is so critical because you are the business, and we look at you in tandem. And one of the things we look at very closely is your personal lifestyle, You know, how much debt do you have personally? Credit card debt. How many cars do you have? Do you live in the big house? You know, these kind of things. How much does this business have to provide for your lifestyle? And then just overall personal credit. Do you pay your bills on time? It's so critical to the success of your business and to not letting your business get in trouble. Of course, collateral. We like collateral, but it's not the end all. Cash repays loans. So we adhere in the 5 C's of credit. We go into a loan expecting there's going to be one weakness, at least one weakness, and probably more like 2 weaknesses. But when you get into 3 weaknesses, this probably isn't a good deal for you or for us if it's that tight. So that's kind of the way we approach it. And yeah, back to your question on specific experience, in the early 2000s, we saw a lot of middle managers laid off. And so you had a guy from the purchasing department of a major company laid off, and suddenly he wants to open a mailboxes, et cetera, or something similar. So you naturally think, or a teacher opening a daycare center, you think, oh, what a great fit. But it really comes back to what Tracy said. Do you have P&L experience? Do you have experience managing people? All of those things that you need to run a business. I'm not saying that teachers don't make great daycare operators, but they have to shore up their weaknesses in the fiscal administration of that business with somebody else typically. Do I have a good CPA that will partner with me? Or how do you shore up your weaknesses? As a small business owner, you should be looking, what are my strengths and how do I mitigate my weaknesses?